How's it going, everyone? Welcome back to another dividend investing video. Just 6 weeks into 2023, and the S&P is up about 7% year to date. As stock prices have been rising, yields are dropping, companies become more expensive, making it more challenging to find value. One sector where I'm seeing some value right now is the healthcare sector, between some pharmaceuticals, medical devices, and managed healthcare subsectors. There are some great dividend-paying stocks in the sector right now. I'm going to highlight some that I think are buys right now, so let's get to it. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. The healthcare sector has some solid dividend-paying companies. Makes sense, healthcare is a necessity. All of us need it, whether we like it or not. Seems like stocks have been flying this year, but the healthcare sector has been rather weak. Before I get into the three stocks, I want to briefly highlight a couple companies in the sector. The top two companies by market cap on the S&P 500 for healthcare are United Health Group, ticker UNH, which is down nearly 6%, followed by the second largest, Johnson & Johnson, ticker J&J, which is down a surprising 11%. Personally, as a dividend investor, I'd much rather be buying companies like J&J when they are in the red. J&J, a dividend king, is an extremely popular dividend stock, so I'm not going to feature it in this list. Also, I want to briefly point out Medtronic, ticker MDT, medical device maker that we featured heavily on this channel in recent months. Also still looks quite appealing to me. Though it has recovered about 7% year to date, I still think this one's a buy when it's above a 3% yield, and it's still down over 18% in the last year. Let me know down in the comments which is your favorite dividend-paying stock in the healthcare sector, and let's get to it. 3 healthcare dividend stocks at a discount. No particular criteria for this group this time. I just think these are all intriguing buy and hold candidates for different reasons, which I'll get into. Company number 1 is Pfizer, ticker PFE. Pfizer is a New York-based multinational pharmaceutical and biotechnology corporation founded by German entrepreneurs in 1849. In 2022, they brought in $100 billion in revenue, and they have 10 products with sales of over $1 billion. This is a pharmaceutical giant. Pfizer is down a staggering 16% year to date, and it's quite a drop in just a few short weeks. What's the story here? Healthcare in general is on a downward trend in the market, but Pfizer has been particularly affected, I believe in part due to the decline in the need projected for its products that were made for the COVID pandemic situation. Their revenues went through the roof during that time, as did its stock price. But now things are coming back down to earth, creating what I think is an intriguing entry point for this classic dividend stock. Pfizer is trading at a PE of 12.6, which is about in line with its 5-year average. It is trading at a discount to the healthcare sector overall with its PE of 18.1. Shares of Pfizer are trading at a 3.82% yield, and this is a few percentage points above its historical averages. And if you want to get Pfizer at, say, a 4% yield, then add it to your watch list with a target buy price of $41. It's pretty close to that right now. Their dividend takes up 48% of forward earnings, 38% of free cash flow over the last 12 months, so very conservative payout ratios. Simply Safe Dividends gives us a safety score of 75 rated safe. Now, from a dividend growth perspective, we have 12 years of consecutive dividend raises with 5-year average annual growth rate of 5%. The last increase back in December was a little on the lighter side at 2.5%. Pfizer pays out its qualified dividend in quarterly payments of 41 cents per share in the months of March, June, September, and December for a total annual payout of $1.64 per share. Notice they increase by 1 penny each year consistently. Shares outstanding, while up slightly over the last couple years, are overall on a decline over the last decade, going from 6.9 billion shares outstanding in 2013 to 5.73 billion shares currently. The average price target is $51.26, representing a 19% upside from its current price. Pfizer looking appealing here. And I think the potential for capital gains here outweighs that slower dividend growth right now, and Pfizer is an extremely reliable dividend company. Really, they're a giant. This is another stock I was forced to sell in my divorce settlement a couple years ago, but look, if this goes back under $40, I'm likely going to have to start re-entering a position there. Company number 2, Amgen Inc., ticker AMGN. Based in California and formerly known as Applied Molecular Genetics Incorporated, Amgen is in the business of human therapeutics. And with a market cap of $150 billion, they are one of the largest pharmaceutical companies in the world. They focus on inflammation, oncology, bone health, cardiovascular disease, and neuroscience. They have recently acquired Horizon Therapeutics, thereby eliminating a competitor and adding some diversity to their already impressive portfolio of life-saving and life-changing products. Amgen is down over 10% year-to-date, just like Pfizer and J&J. 2023 has not been kind to Amgen. But zooming out just a bit to that one-year performance, shares are still up over 5%. Amgen was a stock that performed well in the crazy 2022 bear market. Zooming out even further, owning Amgen stock for the last 10 years did outperform the broader market. Amgen with a total 10-year return of 270%, while the S&P 500 has a total return of 232% over 10 years. Amgen is trading at a forward PE ratio of 13.1, which is a few points below its 5-year average PE of 13.9. It's also trading at a discount to the overall healthcare sector, which is trading at a PE of 17.7. Amgen's current dividend yield is 3.64%, pretty sweet, and also 22% above its 5-year historical norm, which is right around 3%. Shares are looking attractively valued by this metric. Amgen's dividend takes up 48% of forward earnings and 48% of forward free cash flow. This is good for a biotech. I do notice this payout ratio has been on a steady upward trend, so it's something to watch that could potentially slow dividend growth in the future if this doesn't stop. But I'm not concerned about it today. Amgen has been paying and increasing its dividend every year for 11 years at an average rate of 11% per year over the last 5 years. The latest raise came in at just under 10% back in December of 2022. Amgen's qualified dividend payment is made quarterly in the months of March, June, September, and December in the amount of $2.13 per share for a total annual payout of $8.52. We just passed that latest ex-dividend date a couple days before I published this video. In addition to its dividend, Amgen shareholders are also given added value with Amgen's share buyback program. Over the last decade, shares outstanding have declined from 765 million in 2013 to 541 million currently. Amgen has done a fine job with slow and steady revenue growth. You compare the 26.3 billion Amgen made in revenue during 2022 to the 18.7 billion in 2013. The average analyst price target from SeekingAlpha is $254.50, representing over 8% upside from Amgen's current share price. Amgen is a stock I personally own. It is in our dividend growth income portfolio. This is the portfolio I'm featuring here on the channel that I'm building up. I've been adding to it every single month for the last 5 months. It's probably my most beat-down position, and I look forward to the opportunity to continue adding to it at these discounted prices. So I've been asked for ways to support the work we are doing on this channel, so I've created a couple ways you can do so. I am a single father who does this in my spare time, and I work full-time. The first, I made an account at buymeacoffee.com where you can buy me a coffee as a way to support the channel, and you can find a link in the description. Personally, I'd rather use your money to buy dividend stocks, but if you want to support my work in this way, it is much appreciated. And second, much of the data here I get researching from the website Seeking Alpha, and I've partnered with them to bring you a wonderful offer for 50% off your first year of their premium membership. This comes out to about $12 a month, and I think it is a great value for all the information you're getting on Seeking Alpha, as well as all the excellent articles. This site is instrumental in my research to produce the content I do for you guys. You can use the link in the description to get 50% off, and this is a great way to help support the channel. And finally, you can help me out tremendously for free by simply liking this video and making sure you are subscribed. Thanks again. Stock number 3, Elevance Health Inc., ticker ELV. Elevance Health is an American health insurance provider based out of Indianapolis, Indiana. They are best known for their Anthem Blue Cross and Blue Shield health plans. As of 2022, they have 46.8 million members across their various health plans. The name Elevance is new. Prior to June of 2022, they were known as Anthem Inc., and at that point, they changed their ticker from ANTM to ELV. Year-to-date, shares of ELV are down about 3%. Not as dramatic as the pharmaceutical companies we covered, but keep in mind the S&P is up over 7% in this time frame. Over the last 10 years, shares of Elevance have a total return of 753%, which obliterates the 232% return from investing in the S&P 500. Elevance is trading at a forward PE of 14.9. This is right in line with its 5-year average, and for most of the last 2 years, it's been above this mark, so this is the first time we're seeing it at its historical norm in a while. Elevance is also trading at a discount to the healthcare sector overall, which is at 17.7. Elevance is not one to own for current income, yielding about 1.22%. This is about 5% higher than its 5-year average, but this is a solid dividend growth stock, which I will show you. Elevance dividend only makes up 18% of forward earnings and 17% of the last 12 months free cash flow. Nothing concerning at all. Simply Safe Dividends gives us a safety score of 99. They see this as one of the safest dividends in the healthcare sector today. We have 11 years of uninterrupted dividend growth thus far at an average annual growth rate of 14% per year over the last 5 years. The latest increase was announced just a couple weeks ago. We highlighted this in a prior video at 16%. And when you have a lower yielding dividend stock, you expect to see strong dividend growth like this. It's one to consider for those with a longer outlook on their portfolios. Now, as with the others, Elevance is on a quarterly dividend payment schedule in the months of March, June, September, and December in the amount of $1.48 for a total annual payout of $5.92 per share. Elevance has bought back shares from the market every single year over the last decade, returning more value to shareholders, going from 304 million shares outstanding in 2013 to the current shares outstanding of 243 million. Annual revenue has more than doubled over the last decade. In 2013, Elevance brought in $71 billion in revenue. In the last 12 months, they made $157 billion. The average analyst price target we get from SeekingAlpha is $566.62, representing 16% upside from current price. And remember, for those of us who don't have huge amounts to invest at a time, fractional shares are a great way to build up positions in stocks that are priced like this. Remember, share price means nothing in terms of valuation. I use Fidelity to buy fractional shares, and I'm glad to be able to build up positions this way. Those are my 3 healthcare picks for dividend stocks at the moment, and I do want to stress, again, I think J&J is also looking quite nice here. Full disclosure, I am long UNH, J&J, and AMGN. I'm also considering starting a position in Pfizer in the next couple months. I'd say if it dips under $40, you pretty much guarantee that's what I'll be doing. Now, if you found value in this video, help a brother out, press the like button, and hit the notification bell so you are ready for that next video. If you're not following me on Twitter, it's at Div Growth Income, the only social media I have at this time. No, actually, I just opened up a TikTok as well, kind of experimenting with that, but we'll see how that goes. Thank you so much for sticking around, and until next time, folks, keep investing.